Most traders fail not because they don't work hard, but because they lack a structured playbook to guide their decisions. Trader failure stems from having hard work but missing the crucial element, a proper playbook to direct that effort. They watch countless videos and try multiple strategies, only to end up more confused than when they started. Amateurs trade with confusion and guesswork, while professionals rely on a clear, structured system every single time. The answer is simple: a playbook that gives you structure, clarity, and confidence in every trading decision. Welcome to the Trader Playbook, your complete guide to trading with purpose and precision. Money Mastery is your pathway to both financial freedom and sustainable wealth creation. In today's video, I'm handing you something priceless, a complete trader playbook in one place. One system, one structure, one decision framework. That's all you need to transform your trading. This playbook answers the three critical questions: what to trade, when to trade, and just as importantly, when not to trade. Let's explore what a trader playbook really is and why every serious trader needs one. A trader playbook isn't just a strategy. It's a complete rulebook that governs every aspect of your trading life. The playbook starts with 4 foundational pillars: market selection, strategy selection, entry rules, and exit rules. It also includes 3 critical components: risk management to keep you alive, psychology to keep you disciplined, and a review process to keep you improving. The golden rule is simple: if it's not in your playbook, you don't trade it. First up is market selection, deciding exactly where you'll focus your trading energy. Professional traders limit themselves to just 3 liquid indices: Nifty, Bank Nifty, and Fin Nifty. These approved indices stand in sharp contrast to prohibited instruments like stock options, illiquid markets, and random tips. Here's the counterintuitive truth: professional traders reduce choice, they don't expand it. Before choosing any strategy, you need to pass through the first filter, checking the market condition. Every day, the market falls into one of 3 conditions: trending, ranging, or volatile. A trending market shows strong OI flow and a clear directional bias. A ranging market displays high OI on both sides with price stuck in a zone. A volatile market reveals collapsing OI and expanding IV, signaling big moves ahead. Remember, market condition decides your strategy, not your mood. Once you've identified the market condition, it's time to select the right tool for the job. When the market is trending, you deploy option buying strategies to capture directional momentum. When the market is ranging, you switch to option selling with strangles or condors to collect premium. When the market turns volatile, you use straddle or strangle strategies to profit from big moves in either direction. The wrong strategy in the right market loses money, but the right strategy in the right market prints money. Now let's talk about entry rules, the checklist that removes emotion from your trading decisions. Before every trade, you must confirm 5 things: market condition, strategy match, time window, option chain alignment, and OI flow. If even one condition fails, you skip the trade, no exceptions. Risk management isn't just important, it's the core of survival in trading. Your risk rules include fixed risk per trade, maximum trades per day, maximum daily loss, and predefined stop losses. Think of risk management not as defensive, but as offensive survival. It keeps you in the game. Once you're in a trade, you need clear rules for managing it and knowing when to exit. Your exit framework covers partial profit booking, trailing stops, exiting when logic breaks, and never holding based on hope. Remember this: hope is not a strategy. Option selling deserves special attention because it offers a probability edge when done correctly. The selling rules are straightforward. Only sell when IV is high. Use strangles or condors. Always define your risk and book profits early. Sellers survive in this game because they respect risk above all else. Now we come to psychology, the invisible edge that separates winners from losers. Your psychology framework includes no revenge trading, no overconfidence, no trading after emotional events, and detaching your identity from profit and loss. Here's the truth: you don't trade the market, you trade yourself. To improve continuously, you need a journal and review process that captures every lesson. After market close, follow the sequence. Record every trade, note any rule violations, screenshot your charts, and conduct a weekly review. Your journal becomes your coach, giving you objective feedback that no one else can provide. As you progress, you'll need rules for scaling up and managing drawdowns to ensure longevity. Scale your position size only after proving consistency, but reduce it immediately during drawdowns. The longevity rules are clear. Prove consistency first, reduce size when losing, stop trading at maximum loss, and always protect capital. In trading, you grow by staying alive. Survival comes before spectacular gains. All these rules come together in a simple daily routine that creates consistency. Your daily routine has 3 distinct phases: before market, during market, and after market. Before market opens, you check your bias, decide your strategy, and mark key levels. During market hours, you execute only playbook trades and avoid random entries. After market closes, you journal your trades, review your performance, and identify areas to improve. This routine creates consistency by turning rules into habits. Let's wrap up with the trader's code, the essential principles that define disciplined trading. The code starts with 4 foundations: 1 market, 1 playbook, clear rules, and defined risk. It's completed by 2 critical practices: emotional control and continuous review. Trading success isn't about intelligence, it's about discipline with structure. If this trader playbook gave you clarity, hit like and comment "playbook ready" below. Subscribe to Money Mastery, your step-by-step guide to financial freedom and wealth creation. This playbook can change your trading, but only if you follow it.